Everybody, sorry for being a couple of minutes late. I'm just going to quickly run through with you about Nesa Investment Holdings, and thanks very much to Kathir, who's one of our trusted providers, for setting this all up. I think if we could just flick through the presentation, and if you've got any questions, if you could note them down and perhaps ask them at the end so that we don't waste too much time. I hope that's all in order with everyone. Okay, so just briefly, Nesa Investment Holdings is a Section 12J fund. For those of you who don't know what a Section 12J is, it's an entity that is permitted in terms of the Income Tax Act to raise capital from private investors. Those investors are allowed to deduct their investments from their taxable income. We then take that money and we invest it into solar projects, and we sign offtake agreements with our clients in the form of either PPA or a lease. Today, we're going to focus predominantly on PPAs, just sort of understanding how we work and what our offering is. If you've got any other questions regarding other options, I can certainly address that later on. Okay, so just briefly, we're an independent funder. So any EPC with a viable project can approach us and ask us to provide funding for a project. We would then commission the EPC to build the plant according to our standards and requirements that we need. We would pay that EPC for the work, and then we would just enter into an offtake agreement with the EPC's client. So essentially, what we're doing is we're becoming the EPC's client, and the end offtaker becomes our client. In terms of monitoring and providing O&M to the project, we would then enter into an agreement with the EPC to do that. So there's a nice benefit in that we obviously pay the EPC for the project. They make a fair margin, and they make a profit of building the system. But in addition, there's nice sort of, call it annuity revenue that can be earned by the EPC for ongoing maintenance of the plant. I think we all know what the benefits of a funded solution is, especially in a PPA. It's guaranteed savings. There's zero capital outlay to the client, and you're getting clean energy at a discount to the grid from the get-go. Just briefly about us, just so we have got a bit of a track record. We've been running for just over 5 years now. We've got around 250 million rand under management. That includes sort of various cash holdings and projects under our management. A couple of them to the right there. I think probably our most significant one that we've got is the portfolio of the macro stores around the country. But we do have quite an extensive portfolio in the industrial sector. And we've got sites ranging anything from sort of 60 kilowatts up to 1.3 megawatt peak. So we are quite diverse in that. We don't have a hard limit, although we are sort of starting to look at 100 kilowatts and upwards as our sort of minimum threshold for projects. That geographical breakdown that we've got there at the bottom, which is 55 sites, that's grown to 65, and we've got another sort of 5 under at the moment, which should take us to well over 14 megawatts in the next few months. So it's quite exciting times, and the majority of those are on power purchase agreements. You'll see that there's quite a heavy weighting down in Nelson Mandela Bay, the Eastern Cape. And that's because we've got quite a few projects there with PowerX, where we wheel our power back into the grid. But we are looking at certainly expanding around the rest of the country. So if there are EPCs in other parts of the country, such as KZN and Cape Town, we'd certainly be interested to chat to all of you if you've got viable projects. As I said, we have got a bit of a track record, so we do regularly hit the news. We've got a very good relationship with ABSA, who provide financing services to us as well in the form of debt. But we're not sort of limited just to them. Okay, so the offering for a PPA. The obvious attraction is a zero upfront investment required. I think the one thing that must be done is this must be qualified. There are some situations where if the client's financial standing is not that good, where they might not qualify for a PPA because their finances are not in order. If they're doing this a little bit marginal, sometimes what we do require is a deposit of a security deposit of sorts. So while we say zero upfront investment, it does come with a caveat that if the client is deemed to be slightly risky, we might ask for a deposit which is held in an account on our side against that asset. But it doesn't go towards paying off the project per se. It still remains in the name of the client. The guaranteed savings that you get up front, it's obviously dependent on the length of the PPA. So a PPA can range from anything from, we've even done a 10-year PPA, which I find a bit bizarre, but with the client's request, anything from sort of 15 to 25 years. Naturally, the longer your term, if you're going for a 25-year PPA, the lower we can make the initial tariff to the client, which means that you've got a far better chance of enjoying far better savings up front. I think the standard PPA that most people go for is a 20-year PPA, but we are flexible in terms of the term. The nice thing about a PPA, it's the insurance and the maintenance is all included. So from our side, we make a provision for inverter and panel replacements and general sort of maintenance. We include annual inspections. Somebody wanted to ask that, or? Sorry. So we provide full maintenance and insurance. And the insurance on that side, obviously it's our asset, so it comes out of our pocket. It covers theft, hail damage, lightning strikes, the usual sort of normal risk. But in addition, what we do cover, we have a performance warranty insurance, where we insure a minimum of 90% of the output of the system. So from a client's perspective, I think a lot of people are very nervous about signing these contracts because they're not quite sure what they're getting themselves into. I think we all understand that PPAs come with a lot of terms and conditions. And we don't need to go through every single iteration of it, but I think some of the key components are, what happens if there's non-performance in the system and the client doesn't get the savings that they anticipate or that were promised to them. Naturally, before we install anything, we've gone through a reasonably fair technical due diligence. We've assessed the plant. We know what the client's load profile will be, and what the estimated benefits will be. In the event that the system does not perform, and it's for lack of sun, and I know it sounds bizarre, but look what happened in the first 4 to 6 weeks of this year, where we had that cyclone from Mozambique come through. I think most people know that their solar systems didn't generate anywhere near what they said that it would produce, and that knocked out a good percentage of your output in a year. We were able to claim insurance from our insurers based on lack of sun. It also covers things like sort of bona fide design flaws that cause the system to underperform. So it is quite a substantial insurance policy that we have in place there. And I know the last one sounds a bit bizarre. You wouldn't think that the benefits of being black owned is that immense when it comes to energy procurement, but it does. It's a huge thing for clients who are very focused on ensuring that their procurement scorecard is high. So for your big corporates, where this is important, if they're offsetting quite a portion of their electricity procurement through an offtake agreement with us, it is often it can be a make or break on the decision-making process. And what we found is that many companies almost insist on this now if they're going to sign a PPA. So it's a very nice feather that we've got in our cap, and we're very grateful to have the shareholders that we do. In terms of the funding options, I did mention earlier that we've there are a variety of options. We'll focus on the power purchase agreement, but maybe just to touch on the solar lease and the roof rental quickly. The solar lease is some people prefer it. It's usually a shorter term, sort of a maximum of 7 years. And it would be based on a fixed rental or fixed lease per month. And at the end of the term, the idea is that the client owns the system and that ownership transfers. The downside of having a solar lease is that generally it's very difficult to give them a payment plan where the monthly fee is lower than the savings that would be enjoyed from the solar system. So from a cash flow point of view, it's not really the best option for a client. If somebody wants to have a short term, sort of 7 years, my advice is to rather go to the bank and ask for an finance lease where they can own the asset. They can enjoy the Section 12B deduction that you can get from a solar system on day one, and they can pay it off over sort of 7 to 10 years, whatever the bank offers them. It's a far better return on investment than going for a short-term solar lease here. In terms of leasing your roof and a roof rental, again, this applies to certain clients. If you have a look at down in Nelson Mandela Bay, our off-taker is Powerex, who buy the energy from us into the grid and wheel it to other parties. And all we're simply doing is paying the property owner a roof rental for the use of their roof. So the end user of the energy and the beneficiary of our rental are two different people. So it applies when you can wheel power to different parts of the country or to third-party clients. But where we've also done roof rentals is for property owners who want to enhance the yield of their portfolio. Essentially, what we do is we enter into a power purchase agreement with them. We sell the power at the same price as the grid. And then on the back of that, we would sign a roof rental agreement where we pay the property owner a fixed monthly rental for the roof. And what that does to a property owner is it provides an additional form of fixed revenue to them. So basically, if it's another tenant in their building, and they are able to then go and discount that contract to a bank or a potential buyer as additional revenue. So it's a way to increase the yield on or the value on the building based on an additional lease. I think what we're going to focus on here is the power purchase agreement. I said the average term is 20 years. And the benefit of that is that you've got certainty that a portion of your power is at a fixed rate and a fixed escalation per year. So the client can opt to fix their escalation, or if they want a floating escalation, we can certainly do that. We can link it to Nesa at a discount to Nesa. It all depends on what the client's appetite for risk is and what their view of grid escalations going forward is likely to be. Just in terms of the funding process, well, I did say that any EPC can come to us with a viable project. It's we certainly hope that the EPC's got a track record. There's certain minimum requirements, and the first process is to onboard the EPC, and that requires submission of various company documents, your KYC docs to us. We would need to have a look at some of the reference projects that you've already built, to ensure that we're happy with the quality standards. It is preferred to have EPCs who are PV Green Card certified. It's not a compulsory thing right now, but it certainly is going to be something that we will make a requirement in the future, as I think it's the right thing to do and to support the industry and make sure that we're all self-regulated. The next step is to actually submit the project information. We've got a form that just needs to be completed. It generally just sort of gives the client's details to us. Often it asks for the load profile. We need to know what the design of the solar system looks like and what the expected energy yield from that system will be. And then we just need to know what the client's electricity tariff is. Very often, it's not the easiest thing to calculate a weighted average tariff from the client on a time of use tariff. We have the ability to do that in-house. So if we have a copy of the client's bill, we can verify that and ensure that we can calculate the client's grid tariff correctly, so that we can indicate what the expected savings will be. The next step is we put out an indicative proposal, and it's indicative because the final approval comes after that. This is very much a discussion document and a marketing document. If the client likes what they see, they sign it, they approve it. We then move into far more detailed due diligence and vetting of the project. And then that includes financial vetting. So we'll need to see the audited financial statements of the client. We'll need to, if it's a rooftop structure, we'll certainly need to see do a structural assessment by a professional engineer to ensure that we can, in fact, put the solar system on the roof. And then we need to double check the load profile. And this generally, we're looking for half-hourly or hourly load profile analysis for a couple of weeks, unless we've already received that. Once we've done that and we've ascertained that what the correct size and costing of the system will be, then we'll enter into a commercial contract with the client, which is the power purchase agreement or the lease, depending on what they choose. And these will all be subject to a conditions precedent or various conditions precedents being met, including SSEG registration. We all know that dealing with some of the municipalities and Eskom can take some time to get it up and running. In some of my experience, it's taken 8 to 9 months to get an approval through the Eskom process. And in that time period, you can have fluctuations in the price of the solar system or the components that go into that. And it's just important to have this conditions precedent that once all of these conditions are met, that is when the contract then becomes final and binding, which then leads us into the final approval stage, where we confirm the costing with the EPC, and the PPA then becomes a binding document. We will then enter into a construction agreement with the EPC to build the plant, and we provide progress payments along the way. So I think the nice thing about us is that we don't pay towards right at the end. The EPC doesn't need to find working capital to purchase to build the system. We'll provide those progress payments as if we were the client themselves, if you're doing an outright purchase option. Once the construction is completed and all the final completion standards have been met, then we go into commercial operations, and we will start billing the client from that moment onwards. And we will enter into a service agreement with the EPC to service the plant for a minimum period of 24 months from the commercial operations. And that contract will be reviewed as and when it expires. As I said, EPC requirements. We hope that the EPC has had at least a track record of having installed at least 100 kilowatt peak site, and 500 kilowatts in total. I know it doesn't sound like a hell of a lot, but we do need some kind of track record to be able to make sure that we are partnering with the right EPC partners. If you haven't got this under your books, it's not the end of the world. It's not that we won't look at it. It's just that we may have to partner up a little bit closer to you and provide engineering support. So we can do that. It's not that that's not a sort of a hard line in the sand. I think our whole goal is to make sure that we act as partners. We're not here to sort of steal anyone's lunch. We will certainly come in and join you on sales calls if required. We don't just sort of spit out a proposal and then expect the EPC to do all the work to close the deal. If you're the client, you certainly want to know who Nesa is and understand who's behind the business, and we will certainly get involved in helping you close a lot of the deals that you bring to us. As I mentioned, we have an insurance from our point of view in terms of the contract, but in terms of building and construction insurance, it is a minimum requirement that the EPC holds at least contractors' insurance liability, and as well as all risk. We don't have a specific minimum threshold, but it should be sufficient relative to the size of the project. So you would need to submit your insurance docs, and we'd have a look at that. As I said, PV green card, not compulsory yet, but certainly will be something that we're going to enforce in the coming years to ensure that we have a certain level of quality that is given to us. We do expect the EPC to be able to provide O&M service. If not, we can make alternative arrangements, but it is preferred, considering that the EPC does have the initial relationship with the client, and we would want to maintain that relationship going forward, as they would understand the site and the complexities around it. We do pay a monthly retainer for those services, which include the annual service, and just sort of fault troubleshooting. But we pay on an ad hoc basis, as and when, if there's any fault that needs to be repaired, we would then request a quote from the EPC, and we would approve or decline the quote accordingly. In terms of compliance, we're very strict on occupational health and safety. We just can't afford to have any issues on site there. So you've got to be up to date with that. You've got to have a health and safety file in place for your project. You've got to be registered with the Department of Labour in terms of COIDA, and then naturally you've got to be in good standing with our good friends from SARS. Amongst others, there are maybe some other things that I've left out, but those are the big three. In terms of equipment, I know everybody's got their own favorite inverter. At the moment, we prefer Huawei and SolarEdge, purely just from a continuity point of view. We've got a good relationship. We understand how the stuff works. Our monitoring systems speak to them. We're not, it doesn't mean that we're exclusively Huawei and SolarEdge, but we would prefer to stick to that. In terms of panels, well, anything that's tier 1 is fine. If it's not tier 1, we won't consider it. Okay, so I have mentioned sort of some key elements of the PPA earlier. As I said, the default term that we propose is 20 years, but we are flexible in terms of offering shorter or longer durations. As I said, naturally, the longer the term, the lower the initial PPA tariff can be, which means that the client can enjoy much better savings from the get-go. The other thing that we're flexible on is the escalation rate of that PPA on an annual basis. The default is 6% per annum, but we've had clients who've asked for 2% or 3% escalation because they're worried that what happens if Eskom doesn't increase their tariffs for the next couple of years. I think everybody's got a bit of a laugh at that, but it's a reality, and we're flexible to accommodate a client's request. What must be understood is if we do adjust the PPA tariff, the escalation rate, the PPA tariff will change, because the escalation rate will affect our returns on our end, and it'll determine what rate we can start at. So if our default escalation is 6%, and we can offer the client a R1 per kilowatt hour PPA, if he asks for a higher escalation rate, 10% per annum, well, then we can naturally drop the starting tariff, because we're going to make our returns up as we go along in the contract. On the flip side, if they ask for a 2% escalation, that starting tariff could jump to R1.30, let's say, just using sort of thumb sucks here. I did mention the performance warranty earlier. We guarantee 90% of the energy generation, and that is an insured policy that we have. It's a combination of self-insurance and a proper risk product taken out through an underwriter. And then I think the last point is, this is probably always the big debate in the PPA market, is take or pay versus pay for use. The take or pay, if maybe I'll just quickly explain it, whatever the system delivers at the point of interconnection, you pay for, whether you use it or not. We all know that some clients they can't use all the solar energy on weekends. And a take or pay contract says, well, if we generate over weekends and you're not open and you're not there to use it, well, that's just sort of tough luck. You still got to pay for it. The pay for use is a very clever marketing tool that tells you only pay for what you use. Whether, it doesn't matter what the solar system produces. What you've got to be careful of in a pay for use PPA is what is the minimum amount that you've got to use. Because if you suddenly decide to sell half your factory machines and you now use half the energy that you used to use, well, that's certainly a risk to us as a funding provider, because we certainly won't be able to recover the amount of revenue that we said we would when we offered the contract to the client. So you've got to be very careful about the terms and conditions on these. And that's what I call the tariff trap for a pay for use. And just to briefly explain what I call the tariff trap is, if you're signing a 20-year agreement, a PPA, and you sign it at R1, and you pay for what you use, which is 90,000 kilowatt hours. If you get to the point where you're allowed to feed power back into the grid, and you can get some kind of feed-in tariff or whatever it may be for it, or some kind of compensation, if you're still locked in, and you're trapped in at that R1 per kilowatt hour rate, but now you are taking all 150,000 kilowatt hours from this solar system that are being generated, you're still paying R1. You need to make sure that your PPA allows for some kind of adjustment there. If I take just this example that I'm showing you here, if we had to base a PPA on a pay-for-use basis, and that solar system was a 100 kilowatt peak that generated 150,000 kilowatt hours per year. If the client only uses 90,000 kilowatt hours a year, we're going to get our revenue of 90,000. If the client only uses 90,000 kilowatt hours a year, we're going to price that PPA at R1 per kilowatt hour, for example, which means that we're going to collect 90,000 Rand. Okay. Over the year. On a take or pay, that solar system has the potential to deliver 150,000. We still need to collect 90,000 Rand to make sure that we hit our returns on our side for our investors, which means that if we are delivering 150,000 kilowatt hours and the client is taking all of it, we can lower the PPA tariff to 60 cents per kilowatt hour. The bottom line is, either with a pay for use or a take or pay, you're still collecting the same amount we're still collecting the same amount of revenue. The trick comes is if you are permitted to sell that extra 60,000 kilowatt hours back into the grid and get a feed-in tariff of, let's say, 30 cents for it. If you are paying R1 per kilowatt hour, you're only going to get a net benefit of 70 cents per kilowatt hour if you're getting 30 cents back. So you're effectively paying 70 cents for that kilowatt hour. If you are on a take or pay PPA and you're getting 30 cents back from the grid, well, then you're effectively only paying 30 cents per kilowatt hour. It's the difference between 60 and 30. So we're just going to be very careful when pitching to clients that they understand what the risks are between a pay for use and a take or pay. And obviously that also depends on the municipality's regulations in terms of allowing feed-in back into the grid. So it's just something to bear in mind when doing your sales pitch. Very often we hear, "Oh, you only pay for what you use, so there's no risk to you. If you don't use all the energy and your business ends up shutting down and you sell half your machines, well, then there's no risk to you. And then, you only pay for what you use." Read the fine print in a lot of these PPAs. It's often not what it seems. In terms of operations and maintenance, as I said, we'll contract with the EPC. The monthly retainer that we pay must cover an annual service every 12 months, obviously. And it must cover all remote and on-site fault troubleshooting. So we do account for that. We do make provisions. So if there are faults that do require a technician to go out to site and just have a look and see what's going on, that is covered in this monthly retainer. Should there subsequently be any corrective work that needs to be done or repair work, the EPC can quote on the work, send it to us, we'll approve it, and that can be carried out. So what we don't do is we don't pay the EPC an amount every month that covers parts replacements, all labor, etc. It's literally just to do preventive maintenance on the site. Any corrective work is paid on an ad hoc basis. We do expect the EPC to facilitate any sort of equipment warranty claims that may be that may arise. I think that's naturally fair. And as I said, any other work is paid on a per case basis on a quotation. We do require that the systems are cleaned at a minimum of once a year. That'll be paid on an ad hoc basis as and when required. And the EPC can do the cleaning themselves, or we can use a preferred cleaning contractor that we have an agreement with. But it is up to the EPC to facilitate that clean. Okay, so just a couple of frequently asked questions. How does the PPA fee escalate? It is a default 6% per annum, but the client can choose if they want a lower rate or higher rate or a flexible rate. For Eskom clients, the PPA would increase on 1 April every year, because that's when Eskom increase their rates. And then for any other local authority or municipality clients, their electricity price increases come through on 1 July. So we time our increases to coincide with both of those dates. Then the big one, can the client exit the agreement? Of course they can. The client can always exit the agreement at any point in time, but they've got to pay the buyout cost. And I think this is where a lot of EPCs fall short in terms of marketing a PPA to their client. They they give this notion that if they don't like the PPA, they can simply walk away from it and cancel it. That's nonsense, and there's no PPA like that in the market. We've made a commitment to commit our investors' money to this project. The clients committed to buying electricity from us over the term of the PPA, and to simply be able to just walk away from it and not and expect us to carry the can is not going to happen. So there is the buyout cost is based on the amortized value or the fair market value of the project, and the removal of the system from the client's sorry, I meant to say client's roof, not account, is for the client's. The removal for the system from the roof is for the client's account, if required. If they buy out and they want to keep the system, well, that's fine. It's not a problem. What happens at the end of the term? For a nominal value of like 100 Rand, we will transfer the system to the client, or some clients can request an extension of the PPA. If they're seeing value in it, we would then assess the situation to see if there's any upgrades that need to be made, and we could factor that into a new PPA extension. The other option is that they can just simply request for Nesa to remove the system, but that removal cost has not been factored into the PPA, and that would need to be for the client's account. If a client wants that cost factored in, well, we can do it, but then it affects the PPA tariff. So we can factor that in up front. It's just the default setting is if the client wants it removed, that it's for their account. What happens if the client needs to repair the roof? Well, they need to pay. We'll remove the system for them, but any associated costs would naturally be for the client's account. So it is advisable that if we are going to enter into a PPA, a thorough assessment of the roof is conducted before we put the panels on. And if there's any refurb work that needs to be done, that the client does it before the panels go on. We've seen far too many situations where client enters into a PPA and they've not on our books, but have not repaired their roof or given a coating to it or whatever it may be, or replaced sheeting, and they've subsequently had to remove the panels at huge expense and lost out on significant revenue or significant savings from the system. Okay, what happens with a grid outage, load shedding, or any sort of outage? The client doesn't pay if it's load shedding. We do factor in a certain amount of downtime on the system and the grid. It's natural. It's South Africa. We have to do that. So there's a certain threshold that we include into the PPA. If it becomes if it's an issue on the client side and it's their grid, it's their infrastructure that's causing a problem, then there would be a deemed amount that we would start billing in terms of power that could not be delivered to them, but should have been delivered. And that is covered in the PPA. Everyone asks about tax benefits with solar systems. Obviously, if you purchase a system outright, you're allowed to depreciate the full amount, the full value in year one, in terms of Section 12B. That does not apply in terms of the PPA. The reason for it is that we own the solar system, not the client. So the only benefit that the client gets is a lower cost of energy, and any tax implication would be that's basically increasing their revenue. So the client would need to ensure that they understand what the net effect of the savings is to their company post-tax. The big one that's come onto the books at the moment is renewable energy certificates, or RECs, carbon offsets. We, as a default, we do not include the RECs in the power purchase agreement. However, we can. If we need to bundle it in with the PPA, we can certainly do it, and the renewable energy certificates would then transfer to the off-taker. But that would need to be specifically stated in the PPA, and there would be a price attached to it. It's not for free. It would be based on how many kilowatt hours are generated from the system, and what the market price is for a renewable energy certificate. So it would be on a case-by-case basis. And then what happens if the client sells the building? So there are a couple of options. It's not ideal if the client sells, but it's not a problem. The client can transfer the PPA to the new owner, but we would need to vet that. We would need to see what the new owner's financials looks like, and then we basically need to go through a new financial vetting process. The challenge with sometimes transferring a PPA is that the new owner's energy load profile, if they're a different type of business, might not be the same as the existing client. So we need to be very sure that transferring a PPA to a new owner is the right decision. The other option is to exit the agreement by settling the buyout cost, which I mentioned earlier, or we can relocate the system to the client's new premises, and it would be at the client's cost. Again, not ideal to remove solar systems from roofs for the sole reason that stuff gets damaged. It's never the same again, and it does come with a cost, but it certainly can be done. That's a bit of an outdated shot of our team. There are another sort of 5 people that have been added to that in the interim, but we haven't had a nice photo shoot in the past to make us look all pretty again, but we will update it pretty soon. So that's it in a nutshell. I suppose we can use the rest of the session for any questions if you've got.